Welcome back to the neighborhood, boys and girls. We have three-time returning champion Tyler Ardron in tonight. We're doing a special edition because the FHA / government made a bunch of changes to insurance where they are going to save a lot of people a lot of money. And I wanted to have Tyler come in and talk specifically about these changes, because if you have an FHA loan and also have flood insurance, you are now paying way more money than you need to pay as of a week ago. So we try to use this as a resource for everybody. And I knew the first person I wanted to talk to about this was Tyler, because Professor Tyler today, Professor Ardron today, knows every in and out of these things. So no personal stuff, no backstory, no Tyler goals, nothing like that. Start off, just give a little synopsis of what changed and how it helps people right off the bat.
Yes. So first, thanks for having me for a third time.
For sure.
Definitely the first to do that.
Your mom and your brother are both going, dude, I got to catch up to this guy. I don't really know what's going on. I know Luke's going to call me and we go,
big video.
When they coming back?
Video.
I told him we're going to do a family video.
I heard.
I'll bring a couch in here, see you guys all day, and we'll go 1, 2, 3, right down the line.
That'd be hilarious. But like you said, huge news. FHA is now accepting private flood insurance. So just to kind of go over the differences for people,
for sure,
so they know. So previously to this change, FHA would only accept National Flood Insurance Program flood insurance, NFIP. And NFIP flood insurance is through the government. Generally, it's more expensive.
Which always means it's through the government. It's more expensive. They want their cash.
There are certain instances where it's not, and that's kind of we'll be able to tell if so. Minimal, but. It was a lot more expensive. Now, FHA can go with private flood insurance, and what that is basically private companies that are offering flood insurance. And obviously, with more companies, creates competition, which creates better rates. Whereas the government at one point was the only thing offering flood insurance. So
it was this or nothing.
Right, and it's a requirement. If you have a mortgage, you're required to have flood insurance. So now these private companies, probably now going on 7 years ago, got really big. Most are backed by Lloyd's of London. They set their own rates just like a private company would. And now also how they're able to offer lower rates is they're able to accept and decline people, or they accept and decline people. So if they don't want to take on the risk, they don't have to write it. But if they do take on the risk, it's generally around 40%, upwards to 60% cheaper than the National Flood Insurance Program. Again, the reason they're able to do that is because they're taking on less risk. They're declining stuff that's more risky. They're leaving that to the government most of the time.
Yep.
And then the stuff that, where the creek's in the back and somehow that house is in a flood zone, private's going to come in at a really reasonable rate. And that's great for FHA because, most of the time FHA's buyers are first-time homeowners. They're buying their first house, right? So it's not, it's not a high-dollar house most of the time. So if they had a flood insurance rate of $2,000, if not more a year, that is a huge factor into their mortgage payment. So now with FHA accepting private, when their National Flood Insurance Program policy expires, they can go to private flood insurance, and they could save potentially $200 a month by switching to private flood insurance.
Real world stuff, not hypothetical. I had a client that Tyler did flood insurance for that was paying $2,700 a month in national NFIP, whatever you just said, flood insurance with FHA.
Yep.
And when they switched to private insurance because they did a conventional loan, it was $536, I think it was.
Super cheap.
Something crazy.
Super cheap.
Something crazy that went through.
Yeah.
So, real world application of this. Bad news for Mr. Mortgage. Good news for Tyler, and good news for consumers. You don't have to refinance if you have an FHA loan and you have the private insurance.
Yep.
Previously, if you had 2.75 on your interest rate and an FHA loan, you were stuck paying that high insurance. There was nothing you could do.
Right.
Now, when your flood insurance is over, you do your research which Tyler's going to talk about in a minute what you look for. You find out your policy's about to expire, you can get private insurance, keep your 2.75 interest rate. You don't have to switch to a conventional loan, and you can save a bunch of money.
Yep.
So if I'm Joe Consumer and I have an FHA loan and I know I have flood insurance, what am I looking at on my paperwork to determine if it makes sense and when I can do it?
Yeah, so the unfortunate part with flood insurance is you can't cancel a policy midterm. So you'll have to pull your policy out, like you were saying, and then look at the expiration date. That's when you're going to want to switch to the private flood insurance, or when you're going to want it to be into effect.
How soon, I'm sorry to interrupt, but I know this is an issue.
Yep.
How soon do you need to give them notice so that they don't renew? Because the NFIP automatically renews if it's not told within a certain period of time, and then you're stuck with it for another year. You can't go through because your company, because it's escrowed, will pay it. So how many days before it expires do they need to let them know that they plan to use private flood insurance?
Yeah, so I'd say probably you want to reach out to us like 90 days before, or 60 days. But really now about 2 years ago they made a new cancellation code for flood insurance, to where if we have the same effective dates, you're able to cancel your NFIP policy. So even if you're watching this video now and you see your policy expires tomorrow, you can reach out to us. We can get the private policy put in place for tomorrow. And then even if your NFIP policy is paid for already, let's just say by your lender, we're going to want you to pay for this private policy to show proof of insurance. And then we can send that policy to the National Flood Insurance Program. And like I said, as long as they have the same effective dates, you can now cancel that National Flood Insurance Program policy. But you can't do that if you renewed, let's just say, the NFIP yesterday. Now you reach out to me today. We got to wait till next year. So it's got to be the same day.
Once the
before.
policy's in effect for one day, it can't be canceled.
Exactly.
Okay.
Because now I can't predate a policy, so I have to make your new policy say effective today. That NFIP policy was yesterday. The dates are off, and they're going to go with whatever dates sooner.
Okay.
So, in that instance, you're, unfortunately beat.
Okay.
You got to wait a year.
And what do they? Let's say most people are novices in this arena, and they're not even sure if they have an FHA loan. Mm-hmm. Is there something on their paperwork, some digits or letters that would identify their flood as this? Is there something to look for? Yeah, so
at the top of your declaration page, you'll see it says NFIP policy number, because for National Flood Insurance Program flood insurance, you're able to go to any write your own carrier. And what that is basically a carrier that handles and services your policy. But ultimately, the carrier is backed by the National Flood Insurance Program, and the rates are regulated and all that good stuff. So you can go to State Farm and get an NFIP policy through State Farm, but they all have a NFIP policy number, no matter what write your own carrier, and that's listed at the top. Also, in the premium and everything, you'll notice there's like a ton of different fees, reserve fund fee. All these different government fees, and that's another way to tell. A normal policy would just have taxes, maybe a little fee, and then total. Whereas the National Flood Insurance Program one has a bunch of different fees broken down that you'll see on the deck page.
Okay.
So
now this is a question that I'm not sure if there is an answer to, but primarily FHA buyers tend to have lower credit scores than conventional buyers. And regular homeowners insurance does take the credit score into account a lot of times, depending on the carrier. So does flood insurance have a credit factor as well, or is that only primary home insurance for that?
Yeah, only certain homeowners companies, like you said. Flood insurance is solely based off the house. Okay. And now with flood insurance, I do want to note this. There are some negatives with private flood insurance, just for our viewers. And I'll go through them real quick. One is you're not eligible for federal funding. So if you have a natural disaster, national disaster like a Superstorm Sandy or something like that, you will, as long as it's a flood, you will be covered with the private policy. But a lot of times they'll offer grants and stuff like that to rebuild that house, and you're not eligible for grants because you don't have a government policy.
Okay.
So that's one negative. Another negative is that the private company sets their own rates. At renewal, they can go from 500 to 10,000 if they want.
Right.
When that happens, though, there's multiple carriers. We have the most on the East Coast. What we'll do is shop them with all the other carriers and just get you switched over. So it's not too big of a deal. And then another thing is you're able to be dropped at renewal. But same thing with like the premium hike. We just shop you with the new company and get you switched over to that company. So it's not too much of a problem or anything like that. But
for private insurance, if there's a claim, is that a renewal / dropping issue? Is that what it would be?
Yeah. So with claims with private, that was a great point because I want to bring that up. Private, one of the questions to qualify is, was there ever a flood claim? So if there was a flood claim, most of the time they're going to ask how much it is, and they're probably going to decline that risk. So they're not going to want to write it, and you'll probably have to stay with the government. Now, when you do
is that only for your term of ownership, or if you bought the house 2 years ago and they find out there was a flood claim 8 years ago, can they penalize you for it and drop you?
Yeah. So that's a tough one because there's no homeowners insurance. We pull it's called through LexisNexis the claim history. Mm-hmm. So I can see any accidents you were in. I can see if you're God forbid your house burned down or something like that. With flood, it's not public information, so I can't see if there's any claims.
Okay.
So I have to ask you, and it's for the house. The questions are generally, was there ever? That's all it is. Was there ever a flood claim? It doesn't matter if you had it or who had it. So I have to ask you, was there a flood claim? If you tell me no, I go off of what we go off of what you say. If you say yes because there was a claim, we want you to be upfront because that is a problem. If there is an actual claim and they find out that you did have one, they could deny that claim.
Okay.
So you want to tell whatever really happened. You want to tell. But a lot of times people don't know if there was a claim.
Sure.
You both
if it wasn't you, how would you really know?
You might not know. And a lot of times, unfortunately, sellers don't, they won't disclose that. And in that instance, you don't know where you answer that question no, and we go with the private flood insurance. But if you do have a claim with that private flood insurance, I've had during Irene or Irma, the one that was like 2 years ago in August, that hit New Jersey and North Jersey. I had probably 150 claims. 90 to 100 of them were through private flood insurance, and like 80 to 90 of them got dropped.
Right.
And when that happens, we pretty much got to go to the government. You're going to pay, most likely a higher premium. And that is a negative. But again, with the positive was, how many years were you with that private company saving money?
Right.
If that private company didn't offer you coverage, you would have been with the government anyway. And, you would have been paying maybe $10,000 over 5 years more.
Awesome.
All
right. So if someone is sitting and watching this, of the million or so viewers that we have, if they want to get in touch with you to ask you some questions, how do they get in touch with you?
Yeah, I'm all over social media, so you can hit me up on Facebook, Instagram, or just my email, tardron@riskreductionplus.com. But I'd say the best way is just social media. Shoot me a message, and I'd be happy to help you guys out.
Awesome.
And I also teach. I did it here for Mr. Mortgage's office. A 1 hour CE class for flood. I do that for realtors. So I'd be happy to come to the office, do a CE class, educate you on flooding. It's important when you're taking these clients to different areas that do have flood zones, because we want to make sure they're educated and all that good stuff.
All right, I'm pretty good at this, but is there anything I missed that you came in thinking I got to talk about this? And we didn't talk.
No, I think this was the biggest thing, the whole FHA thing. I mean, I've been doing this now going on 10 years, and like I said, private probably for 7. It was always an issue with FHA, especially areas like Gibbstown, for those familiar, down near South Jersey, Burlington City. A lot of FHA buyers. The whole area is the flood zone. Those people, I have clients in Burlington City paying $2,600. through the government for flood insurance, and I could get private for like $1,200. So
And there's no, I might be
No,
wrong
yeah,
about
keep
this,
going.
but there's no variations for government insurance, right? Like there's no grade 1, grade 2, grade 3, grade 4. Like some people have a crick around the corner from their house and they're in like whatever it is, flood zone
A
D or
whatever,
something
yeah.
like that. Yeah, where it's not crazy high. If it's private, I'm sorry, if it's government, it's all one.
No.
flavor, right?
So it's
Okay.
they are rating each property specifically.
Okay.
But for whatever reason, a lot of times in areas like Burlington City and Gibbstown, they're just really expensive. And the reason why is a lot that goes into the rating for the government is how the house is built. So, for example, down the shore, all the houses, or the coastline, all the houses are built up high. There's a reason they're built like that. Whereas in Burlington City, it's a similar type flood zone in terms of flood insurance. They're AE zones. But those houses have basements. Basements are a lot riskier with flooding because there's ground movement and there's, way other factors. The living floor is lower, so it could get water, easier than something built up high. So those areas were paying higher, because of that. Whereas private, is really looking into the area. Like, when was the last time this area flooded? Burlington City, it might have been a while, And because of that, they're going to offer a lower rate.
Awesome. Tyler, thank you so much
Yeah.
for making the third trip in.
Pleasure to be
Hopefully
on.
there's no more craziness going on, but if there is, we'll have a fourth trip. And maybe,
Yes,
like I
sir.
said, we'll do the Ardron/Romano family
Family
reunion kind
duo.
of thing in there. Get them in
Awesome.
there. We'll do real estate insurance and all that stuff.
All that
man.
stuff. Awesome.
And if you are going to Triple Play coming up, this may or may not be out for that. But Tyler is doing a table, a booth
Yep.
with another fellow Harvest member down there. So look for him in Triple Play. He will be handing out some tchotchkes.
Yep.
Risk
Yeah. We
reduction
got
plus.
some cool shot glasses.
Shot glasses, that's right.
Yeah.
baby.
So take a shot on us.
That's right, baby. Take a shot. Awesome. Thanks, Tyler.
All right. Thanks, man.